Do you ever catch yourself thinking, God, I wish I had a checklist of do's and don'ts for my balance sheet when I go to file my corporate tax return? Well, guess what? Today I've got the perfect checklist to share with you. Hey, how are you? I'm Duncan McPherson, and welcome back to my channel. Today is the second in my two-part video series where I will provide you with a checklist of steps to bulletproof your balance sheet and ergo your T2, so CRA will leave you alone. And as always, if you're a US business trying to survive the Canadian tax jungle, click on the subscribe button and hit that notification bell, or skip the hassles and reach out to me directly at themactax.com for more tailored service. Now, I know what you're thinking. CRA doesn't audit my balance sheet, they audit my income statement. And for now, this is true for the most part. But with the advent of AI, you can bet that CRA in the very near future is going to be going after your balance sheet too. Because don't forget, up here in Canada, your financial statements are coded right into your corporate tax return. So listen up and get ahead of the game and beat the AI before CRA even starts using it. Let's kick things off. Step number one, grab your 2023 T2. Number two, grab your 2023 balance sheet. And just like your income statement, review them for recurring balance sheet issues like, and I apologize for reading these off the list. Number one, your fixed and intangible asset purchases. Number two, your intercompany balances. Number three, your capital leases. And number four, any significant balance sheet tax items. If it was a headache last year, deal with it this year before it becomes brain cancer, although the next step may help cure your aforementioned brain cancer. Step number two is what I call weaponizing your balance sheet. Begin by making a list of all the hot items on your balance sheet. Hot items are the large dollar items and the items that can cause a tax controversy. Here's a partial list of those hot items: your intercompany balances, your accounts receivable, your capital leases, your depreciable assets, your deferred assets, your non-bank financing vehicles, your deferred liabilities, and all your categories of shareholders' equity. Make sure your continuity schedules are up to date for all your hot items. If they're not up to date, go hire another bookkeeper. You're asking for trouble otherwise. If you're not preparing continuity schedules for your hot items, start doing them. By not maintaining your continuity schedules, you are most likely posting transactions to these accounts incorrectly. Don't believe me? Go take a look at your intercompany account and see what's there. Moreover, make sure your continuity schedules for the following hot items agree to your cash flow statement. Number one, your fixed asset purchases. Number two, your debt financing. And number three, your shareholders' equity. If it doesn't tie out, CRA will sniff it out. Now, just like with the income statement, the next step is very important. And recall, the national firms will never tell you this. Step number three, build your legal file. My friend, this is where the rubber hits the road. Pull together all the legal paperwork that connects to your balance sheet. I mean, your director's resolutions like dividend declarations, your intercompany agreements, your independent contractor contracts, your employment agreements, your purchase and sale agreements, your customer and supplier contracts, your loan agreements, your stock option plans, your stock subscription agreements. Any legal agreement that affects your balance sheet, go get it. Usually your company stores these records all over the place. So do it the MacTax way, where you make copies and you keep them in your audit file. If you hand them to CRA when they ask for it, it'll make them happy and lower the suspicion bar. So now that you got all the legal work, we can move on to the next step. Step number five, tie it all together. Reconcile the legal file to your financial statements and to your continuity schedules. I am telling you, until you put someone on this task and get it done, the legals and the financials are probably not agreeing. And this is where audit problems begin. Step number four and step number five will save you when CRA starts examining this stuff. Most business owners have already made the subconscious conclusion that all of their legal work already ties to their financial statements. It's human nature to think this. But the reason they are usually not jiving is sloppy bookkeeping. So have your bookkeeper reconcile this stuff quarterly and all will be well. And heads up, my next video is all about your legal file and how it underpins your financial statements. Don't miss it. Final thoughts. I know this probably sounds like a mountain of paperwork for you, but most of this work can be handled by a bookkeeper with a little pro oversight. Just a tip, you're not finding a good bookkeeper in June, but on July 1st, they're everywhere. Hire one in July, get 2024 cleaned up, and get ahead of the game for 2025. If you want help, you know where to find me, because if we work together, your T2 will be CRA proof. Here's the truth. The cleaner your return, the more likely the CRA algorithm ignores you. But if your attitude is, we'll deal with it if they ask, CRA's entire system is designed to punish that mindset. And your punishment will be slow, painful, and expensive. So let me leave you with this. I got a new client, a handoff from one of the big firms, really big firms, actually. They had zero taxable income net over the past 5 years. You'd think they'd be safe, right? Nope. They're staring down $800,000 of interest and penalties. Why? Because in the years they had income, they were late on the filings and they were late with their installments. When you carry back a loss in Canada, sure, it gets rid of the tax, but it does not cancel the interest or the penalties. CRA didn't even challenge the losses. They just hammered them with penalties. That's where we are now, my friend. CRA has less audit and more punishment. It's not about what you owe, it's about how well you comply. But you know what? That's it for today. If any of this hits home and you realize you might need to talk to me, just contact me through the mactax.com and let's get chatting. And of course, hit the subscribe button for more tax saving tips. Until next time, stay sharp, stay compliant, and please stay out of tax trouble. I'll see you on the next video.